Welcome to the India Today Business Studio here at the World Economic Forum in Davos. I'm Siddharth Zarabi, and joining me now Challa Sreenivasulu Setty, the chairman of the State Bank of India. Mr. Setty, a very warm welcome. We need all the warmth here in our studios here, but thank you for making the time. The backdrop for this conversation, this first question that I really want to ask you is that the world is in trade turmoil. There are geopolitical shocks. Every 2 days or every day, a CEO all across the world wakes up, reads the headlines, and then figures out what is going to happen to his business. In all of this turmoil, one key message that keeps sticking out, also from foreign CEOs, is India's resilience, political stability, and the maturity of its fiscal, monetary, and administrative policies. How do you yourself see the current situation of India vis-a-vis the rest of the globe?
First of all, thank you very much, Siddharth, for having me on your show. India, I think this resilient India story is talk of Davos, this time and even the last year when we were here. While geopolitical disruptions, tariff-related issues, trade dislocations, all of them have put a lot of pressure across the globe, and India is no exception. But the way India managed in terms of fiscal prudence, in terms of ensuring that sufficient liquidity is there in the system, and some of the heavy lifting done by the government of India in terms of supporting the infrastructure. So all of them indicate, even if you see the latest IMF estimates, our own estimate also puts India's GDP growth around 7.5%. I think it's a very resilient story, and I see that both the calendar year 26 and FY27 playing out very well for India. The banking system is robust, and we expect that the government continues to have the prudential fiscal management, and that gives us confidence that the India's resilient story continues.
Mr. Setty, if we take 2008 as the cutoff year, from there we have seen every few years there is a global shock which then has some amount of impact on India, some spillovers. In 2008 there was the great decoupling theory that we used to talk about it before that. I want to follow up your observation that given the current global context, is there any spillover risk that we also need to keep in mind with regard to the Indian economy?
So the interconnectedness has increased over the years. If you really see, 2010 decoupling story did not play out as much as we wanted, right? We were also impacted, and we had undertaken one of the largest cleanup in the banking system in terms of asset quality reviews and recapitalization of the public sector banks. But in the last decade, what we have seen is that the lot of legislative measures, a lot of fiscal measures, and also in terms of the strengthening of the banking system, both from a regulatory side as well as the banking management side, has made, I think, India, I can't use the word that they decoupled from the rest of the world, but I think much more, as we mentioned right in the beginning, much more resilient to handle these disruptions.
Mr. Setty, our re-engagement with global trade, but in a different context. Over the last few years, we are pursuing currently in conversations for more than a dozen trade deals. Some have reached fruition. A big one with the European Union is perhaps around the corner. The United States is work in progress. What does this mean for Indian industry in terms of newer opportunities, and for a lender of your size and stature, how do you intend to support the momentum that this kind of new trade engagement is likely to generate?
So new trade engagements, the way India pursued to have these free trade agreements, to pursue something which is win-win. It's not that, you are giving away something or not giving away at all. That approach has now moved to a more pragmatic approach, that what kind of trade facilitation can be done while using the FTAs is still in the hands of the industries, right? The government only can have a free trade agreement, but how do you use that FTA
is up to the
industries. and I'm sure that industry bodies are working on that, and also if you see the free trade agreements also had helped us in terms of geographical diversification of the trade, not necessarily that you are one particular country or a group of countries you are highly dependent on export oriented activities. Now we see that much more diversification happening. That is one part. And at the trade finance part, we are still we are the largest trade finance provider to the Indian industries today. Out of my $90 billion overseas book, almost 30 billion, 25 to 27 billion dollar is a trade book, and predominantly funding the Indian corporates accessing the overseas trade finance.
All right, that's a very significant number and point that you have shared with us. You know, you spoke about our high growth rate, 7.5%, inflation at pretty much historic lows. The monetary system has responded, RBI has eased rates, liquidity support has been provided. What's your base case for the cost of capital going forward for pretty much every class of borrowers in India?
So the policy rate cuts, almost 125 basis points in the last 12 to 15 months, has helped the softening of the interest rates on the loan side, whether it is retail loans or corporate loans. Broadly, I think there is a softening. On the corporate side, there is still, we have a concept of MCLR, right?
Yes.
The marginal cost has not come down as much as we wanted or the industry wants, mainly because I think the cost of deposits have remained more or less sticky. So there is a good growth, as the numbers indicate, that industry level, good credit growth, and deposit growth is slightly lagging, which is putting pressure on banks to not to cut the interest rates as much as they desire to on the deposits. So this, having said that, I think some of the monetary measures, some of the fiscal measures are helping to achieve a good credit growth, which I believe is sustainable, maybe in the range of 12 to 14%, the system level credit growth.
Okay, 12 to 14%. On the deposit side, and I'm not asking you this as a SBI specific question, but broadly speaking, at the macro level, at the policy level, is there something that you feel needs to be done? Because I would say, and you are the expert on this, that it seems to be that there is a bit of a structural break with the past behavior of fixed deposits. Although by quantum they still remain the largest, there is a trend shift that seems to be happening. So does the system need to respond differently?
Yeah, this I'm sure Siddharth, many a time I spoke on this. The structural shift which you mentioned is definitely happening, and as the economies mature and the households, individuals' ability to access various non-banking financial savings instruments, this structural shift is definitely here to stay. How banks have to structure their balance sheets now with this, in my view, I think the shift is almost irreversible. There could be some flows happening, the equity market is doing well, there will be larger flows, or if not doing well, smaller flows, but flows definitely will be there. If you see the bank deposit growth at 1x, the mutual fund growth rate is 3x, yes. Right? So, which means that the banks probably have to access the markets more in terms of funding their asset growth. Some of this money which is moving to pension funds, mutual funds, insurance, definitely has to come back to the real economy and support the banks raising the capital, particularly from the debt capital market.
So going forward in 2026, what is the biggest challenge to sustain the strong credit growth momentum, the numbers that you also gave? Is it a demand or tightness in funding? What would you say will be required to keep it sustained for the foreseeable future?
2-3 things. One is Indian economy is all about domestic consumption and domestic investment story. While we do want to have export markets, and service exports are doing very well, and merchandise exports are also picking up, So it is broadly the domestic consumption and domestic investment story, which means that the credit growth broadly coming from the domestic consumption. Even if the corporates have to invest, they would like to see sustained domestic consumption. So the first part is whether this consumption demand is going to be sustained. In our view, our house view is that is going to be sustained. And number two, adequate liquidity in the banking system. I'm very glad to share, I think the RBI always have been assuring us and also ensuring that system liquidity is adequately provided for. These are the two major things, and while global disruptions and the narratives will keep happening, I think for India, these two important things are there, and while fiscal management continues to be the bedrock of Indian economy.
No, that's a very good point, and it's clear that not just from the monetary policy side, but also from the fiscal policy side, we've seen a massive support to consumption. The GST cuts were unprecedented, and we had income tax rationalization also. There is a string of reforms. I want to ask you a broader question on reforms again. 2025, very clearly a big year for reforms. Prime Minister Modi has indicated that path will continue in 2026. So, we started this conversation with a broader thing. What's your own belief about the reform story of India and how you expect it to pan out?
So I was just listening to the minister yesterday in your India Today conversation. I think one point which we all must recognize that a lot of rationalization of the regulations and laws, compliance burden on the industry is sought to be reduced. Labor codes is a big reform which has been there in discussion for a long time, and now the way the industry has taken and reorienting its the labor policies to suit the codes is a very, very important development in my view. So the reforms objective of Government of India is to ensure that ease of doing business and also give confidence to the investors that this is one country which will continue on the reforms path. But if I have to really ask one thing, I think we have also been mentioning from our house point of view is that while the fiscal prudence is there on the Government of India side, the same level of prudence has to come on the state level, states, because the states have to play an important role. Yes. And I see that almost 9 major states representing in Davos, presenting their industrial policies and investment climate is a very good development in our view.
Mr. Setty, again a broader question, and this I want you to explain to our viewers who have for years now been responding to and listening to answers on the question of private capex cycle. Recently, when I put this question to someone, he said we need to relook at this. There may not be investment going into old sectors which are well established. A lot of money is going into newer sectors, including, for example, data centers. There is FDI also. Andhra Pradesh alone, for example, has signed up for 22% of all commitments in FDI that have happened in the past 1 year. How would you explain the private capex cycle right now?
I think the conventional way of looking at the private capex cycle needs to be changed. And also some of these industries, what you mentioned, are capital intensive, and capital is not necessarily coming from the debt capital. There's a lot of equity capital is flowing into these sectors. While we have very strong pipeline, we keep mentioning about the pipeline, and the pipeline is coming from various sunrise sectors. Some of them are not truly sunrise in the sense that they've been there for some time, like renewables.
Yeah,
renewables, they're seeing a pickup there. Data centers, as you mentioned, and we see even green hydrogen and many of these activities not necessarily funded by debt capital. People, and also some of these excess cash flows what they have, they are using on the capital expenditure. I think we need to, like we have identified 8 core sunrise sectors today, and we are setting up a center of excellence which will be inaugurated on the 31st, and this also shows that our focus will continue to be on the conventional industries, steel, cement, roads, and will continue to be there. The future of capital expenditure the private capital expenditure is going to be in these sunrise sectors.
Which are those 8? Can you
Yeah,
name a
broadly,
few?
All 8
I may not be immediately
Yes,
able to
sure.
do that, but I think we are looking at green hydrogen, semiconductors, data centers. Renewables will continue to be one of the focus areas. So these are some of the things which we will be focusing on. And here in these 8 sectors, we are not only developing industry best practices in financing, we are developing capacity building for funding them in case if any debt capital requirement is there. We have currently around 25 partner banks which are signed MOU with SBI, where we will be helping them to understand and also engage with the industry that what exactly they are looking for the financing those sectors in a manner which probably will have to be looked at differently.
Absolutely, because new sectors also mean a new kind of risk which might not have been assessed and factored in. As we wind down the conversation, I ask you this every time I meet you. I interviewed you last year when you were on the cover of Business Today. I want to ask you this about the health of the banking system. The broader macro story over the last 10 years, if we say that India is resilient, if our economic engines are doing well and we are very optimistic as a nation, the banking story is fundamental to that. Had the cleanup not happened, we would not have been where we are today. There is no doubt in my mind on that. As you look ahead, are you confident that there can never be any recurrence of such episodes again? There might be some sectoral risk that might come in due to certain kind of behavior, certain retail delinquency. But broadly saying 1 or 2, 3 years, what kind of outline can you offer us on that topic?
cyclicality
Is inherent nature of banking, right? Fundamental to that. But how best the banking industry today to handle those cycles, that's all about resilience. And we started the conversation with resilience, and I'm glad that we are ending with the resilience. And if we have to say, I'm very confident that today banking in India, globally the banking sector is doing very well. I think we are riding the benign asset quality cycle. Even if you keep that asset quality issues aside, the capital buffers are strong now, and the ability of the banks to assess the risk both at the credit risk level and more importantly on the operational risk level is much more robust now. This is not come overnight. We have invested in the technologies, digitalization, and access to the data in Indian context is very important. That how the underwriting is going to be taken up, and I'm very sure that at least for 5 years we may not have any challenges. 5 years, beyond 5 years is difficult to predict. But even if the cycles hit, I think Indian banking industry is in much more robust position to handle them.
One very final quick question, and this is your own sense of satisfaction and your observations with regard to Indian industry, meeting up to the age of AI. AI is everywhere. Global corporations are doubling down on it. How do you see Indian industry matching up to this unprecedented technological change that is happening?
So this
Conversation technology being central to the agenda happens, when we meet the industries. In fact, I'm very glad that every conversation I have with the industries, whether it is manufacturing industry or even the service industry, the conversation is all about technology. And here in Davos also, the broader conversation, apart from whatever geopolitical issues we keep talking about, is all about technology and how you build the resilient systems, both for your own internal processing as well as customer facing applications. I think the technological investments in India are significant now in the industry level. Even in NBFC sector, a lot of digitalization is happening. But one area, if I have to call out, I think the technology investment in MSME is still a long way to go. Probably we may have to focus on that. More importantly, that they should not be technologically obsolescent. They should not face that kind of system, and they should not become the weakest link in the strong chain.
Absolutely. Strong chain is perhaps the final word and headline takeaway that I take from this conversation with the Chairman of State Bank of India, sir. Thank you very much for your time. With that, it's a wrap on this conversation. We'll see you again. Until then, goodbye.